Hi friends! Today as always, we will be discussing the crypto market and everything related to it. We have chosen only the best for you. Enjoy watching, and don't forget to subscribe to the channel.
Note. Let's do crypto quickly. ETF. Hell yeah, that was a bit of justification after fucking 10 years of fighting. But we got there. And, I've explained it before how I think of this is in two terms. One is anybody who was an investor in Bitcoin in 2011-12 was like a Series A investor. 2013 cycle, maybe Series B. 2015, 16, Series C. The last cycle, Series D. We've just IPO'd it. And usually when IPOs happen in strong markets like this, it reminds me a lot of the late 90s. And I was trading a lot then. I was at Goldman as well then. And what you found is after the IPO, it would launch and it would be choppy as hell for a while. Sometimes it would sell off quite sharply. Facebook sold off really sharply as people took profits, repositioned. Now, don't forget, a lot of people have front run this ETF. So they're going to want to unwind. And many of those are going to switch to ETH that I've talked about before. They think, rightly so, that ETH is the most likely candidate for the next ETF. And if Bitcoin went up 100% because of this ETF, ETH will go up 300% because it's less liquid, put the same amount of money in. Also, there's a lot of people unwinding the GBTC arbitrage, closing that position, selling out, moving into a different ETF. There's a lot of shenanigans going on. And you can see that with the net flows. There was 4.5 billion or whatever of total flows. The net flows are much smaller, 700 million or so. It's still the biggest ever ETF launches in history as the series, but it's all to play for. And I want you to understand how this works is, okay, all of the pre-orders have now been filled. That was all of these ETF providers going to all of their clients, begging them, you need to do this, you need to do this, you need to do this. Everyone's done that. Sure, there'll be some follow-on next week. A lot of the GBTC guys are unwinding, and that will go, some will wait a few days, see if the market is stronger, whatever. So that goes on for a while. You've then taken forward or brought forward a lot of demand. By the end of it, maybe it's 1 billion, maybe it's 2 billion of demand you'll have brought forward. So then who's the buyer? You've got the people who front ran this who want to sell. So you're going to see volatility. And I've always reminded you guys in the do not fuck it up mantra, part of that is expect 30, 35% pullbacks. Could be less, but just expect them. And that often happens when you get to this kind of 61.8% Fibonacci level in the first leg of the bull run. It often corrects sharply. People get washed out, leverage is cleared out, and then the real run starts. And the real run is the run to all-time highs and beyond. That usually starts around the halving. So I'm guessing there's maybe a month or two of chop. And chop in crypto markets is like down 30%. It's just sideways chop. So just be careful out there. I could be wrong, could keep sailing higher, but it just feels like it's trading a bit heavy. And even if it does as a spurt higher, I don't think it makes much progress yet. But this ETF, it's going to attract people because the markets have been strong. Last year, crypto, Bitcoin itself was 160%, right? That doesn't go unnoticed, considering even the NASDAQ managed 50%. So it's like 3x the NASDAQ. But let's start with the RAAs, the investment advisors and the financial advisors. Those guys aren't on Twitter. They have no idea what any of this is going on. All the drama that played out and the false tweet and all of that shit, that total goat rodeo, I don't know any of this. The first they will hear about this is when they pick up Barron's on Saturday morning with a cup of coffee. And they'll go, oh, a Bitcoin ETF. And Barron's will probably have some cynicism in the article, let's assume. And they're like, well, that's interesting, but, I'm not sure it's for my clients. And they go about their business, and then they go and see Jack, their big client, on the golf course that weekend. And Jack says, hey, what do you think of the Bitcoin ETF? And the RAA will repeat what he read in Barron's and what he saw on Fox News. He's based in, let's call it Cincinnati, Ohio. And Jack will ask him, and he'll feel a little bit silly. And then maybe next week, he starts reading a few more articles and a few more positive things come out. Then he starts thinking, maybe I should do something about this. And a couple of other clients ask him. And eventually, he goes and has his steak dinner with his other friend, Mark, who runs the tire franchise in Cincinnati. And Mark's got tons of money and is a bit racy and likes investments like this. And before you know it, he starts building an order book and getting his clients in. He can see they're interested. He's incentivized by the sales process and the commissions. And before you know it, he's mobilized. It's the same with all the RIAs. This takes time. They're not smiling, oh my God, there's a Bitcoin ETF out. Let's all go. It doesn't work like that. It's a relationship business built over time. And this is, all across the United States. It's not New York City in a dealing room. It's a very different world out there. So that's why it takes time. It's the same with any of the institutions who might be thinking about it. Some fund manager who thinks I can sneak it into my portfolio now and not tell my risk manager that I've got crypto. I'll just sneak it in as an equity and hope they don't find out. Same with hedge funds. So that's all to come. And that's why there tends to be this gap. So that's how I'm thinking about it right now. Also, my view, and I've made this very clear, is Solana's my favorite horse in the race of the big ones. I think the first phase is always Bitcoin outperforming. Next is Ethereum. It's at this point in the cycle when the global liquidity turns higher. And when global liquidity turns higher and you've got a catalyst like the ETH ETF, it'll start picking steam. We saw that last couple of days. It was like, wow, okay, ETH is really trying to outperform. I think it bottomed on the massive ETH wedge chart that I put on Twitter yesterday. And I think it will continue higher over time. And I think ETH massively outperforms Bitcoin for the rest of this cycle. So that's the kind of flow, is Bitcoin, ETH, Solana, with Solana at the top of the pie. Again, I could be wrong. You don't need to follow my advice and my weightings and that kind of stuff. And you will find whatever your bag is, and you will be, please don't shill me your bag. I don't really care. And I'm not going to buy it because you're trying to FOMO me into some, $100 million token. It's just not going to happen. So don't do your bag, and why I must look at your particular bag, I don't care. But good luck to you. And hopefully you pick the next 100x. That's not the game I'm trying to play here. Yes, I have a small, filthy degen bag on the side, which I won't tell you what's in it, because then I'll be accused of shilling, and Twitter is a gruesome, disgusting place of which everybody will try and lynch me if one of those tokens goes down. So I'm sticking with the big stuff. So that's the crypto idea number one. The other way of looking at it, you may have heard me talk about, is the IPO idea. Yeah, it's nice. It gives us some guidance of how these things trade contextually. But really, this is a trade deal between fiat world and crypto land. And it's a trade deal because the capital that's flowing into crypto land is not permanent residency. These are not migrants. If you remember, population growth, GDP growth is population growth plus productivity growth plus debt growth. This is not population growth coming into crypto land. That has to be new wallets and actual self-custody or on crypto exchanges and all of that stuff. This is a trade deal to allow TradFi Land, our RAA in Cincinnati, to get his clients across into this new world that has higher rates of return. The best example of this I can give you is China entering the WTO. That was a classic example of opening up a market that had much higher rates of return and absorbed huge amounts of capital over time. And I think crypto will absorb huge amounts of capital over time. But remember, these people are tourists. This is not even foreign direct investment, FDI. That would be VC money. What this is speculative hot money flows into this new economy. And one day it'll wash out again too. So be careful of that. While we want to encourage them, while it's going to help our ecosystem grow, while it's going to create more capital, more opportunities, it'll move your bag as well. This is not permanent residency in our world. And so, yes, we welcome them with open arms, but remember, what we really want is a new financial system being built. Now, interestingly, you saw Larry Fink talking today on CNBC, I think it was. Not that I watch CNBC, but there was a clip And he was talking about, well, this is just the start, because what we actually want to do is tokenize the entire financial industry. And he's dead right. That is the migration of, sorry, it's one of the surviving coconut girl doing whatever she does at this time, every time is bark when I'm on one of these. So as firms like BlackRock, Franklin Templeton, Fidelity, these are currently, you think of these as fiat world companies that have set up offices in crypto land, much like many businesses like Apple set up in China. But what Larry's talking about is the migration, the eventual migration of the financial system into crypto land, which was my core thesis when I first found Bitcoin in 2012, and has remained my thesis of where this is all going, amongst many of the other opportunities. So it's really interesting when you think of it in economic terms. These are economies. This is a digital economy of crypto land that has other states within it, Bitcoin, Ethereum, Solana, whatever it may be. So that becomes very interesting. And you can think of, even within that, you've got, interoperable systems, stuff like whether it's Polkadot or Quant or a whole bunch of these things allow, or Chainlink, interoperability. That's the travel, the border crossing from going from one of these nation states to another. We've got immigration, which is us opening wallets. We've got FDI, which is VC. We've got trade deals, which is hot money flows chasing opportunities within a country, which is the ETF. We have a monetary system. We have interest rate systems, which is the yields. We have a collateral system. You can call that Bitcoin. You could even call ETH collateral.